evening. This is Markets Today and I'm Lata Venkatesh. With me is Surabhi Upadhyay. It was a good day on the bourses with the leading indexes gaining about almost 1.5% each. Mid-caps doing even better. The important takeaway from today could be that maybe a higher bottom is in place. I mean, we didn't go to that 8,000 mark. We turned around at 8,100. Is this an indication that an enduring bottom has been put and the market can make greater strides? That's the question that the coming days will answer. But for today, it certainly seems to be that the initiative is with the bulls. Hi, Surabhi.
Hi, Lata. Yes, lots of volatility so far this week. So let's see how it goes. 2 more sessions left. Lots to talk about over the next half an hour. Let's start with the headlines. Volatile trade, but a strong close on Dalal Street. Benchmark indices shake off yesterday's fall, posting gains of about 1.4% each. The Nifty reclaims 8,200. The Sensex gets back above 27,200. Banks, capital goods and auto stocks top the buyers' lists.
Strong moves in the mid-caps as well, with the index gaining 1.5%. Stocks added into the MSCI Morgan Stanley Capital Index like Marico, Eicher Motors, Concor and Shree Cement rally between 6 and 10%. Opto Circuits gains 6% after launching a new cardiac device in the US and Canadian markets.
Lupin misses the mark on all parameters. Margins fall to 25% versus expectations of a rise. EBITDA and profits also come in lower than expectations. Weak performance in key markets including the US, Japan and India hit Q4 earnings.
Well, those were the headlines, and here are the experts that we will get you on the show. As part of our ongoing special series, Asian Tigers, we'll tell you how Joanna Chua of Citigroup is reading the macro cues emerging out of India. And back home, that's in India, Bharat Iyer of JP Morgan tells us why he thinks the India story is still intact. We'll also get you the managements of companies like Lupin to talk about their quarterly numbers.
Okay, but let's start by talking about the markets first. It's been a volatile day of trade, but the markets managed to end on a strong note. We have now Anuj joining in with a complete wrap-up of what really transpired today. Anuj, all's well that ends well, perhaps?
Well, not for faint-hearted ones, this market actually. If you see the intraday graph of the Nifty, it moved 300 points, actually more, I think, from the high to the low and then back to the high point of the day. And the kind of volatility that we had was really remarkable. But the market ended with decent gains, almost at the high point of the day. So that's something bulls would take with both hands. And the Bank Nifty led the gains, and that's also something that the bulls would take with both hands. So let's talk about some of the stocks that led the market today. Right on top, clearly, private sector banks. Banks in general, but private sector ones did better. So Axis was up 5% and ICICI was up 3%. And among the PSU ones, SBI, the biggest one, was up about 2.5%. Some other heavyweights that supported the market rally, especially in the second half of trade, included Reliance, that was up 2%, Larsen & Toubro as well, up 2%, and more banking names, HDFC Bank was up 2%. Other prominent Nifty winners included a GAIL that was up about close to 3%, and Ambuja Cement up 3%, and a Mahindra & Mahindra that was up about 2.5%. So broad-based rally, there's a lot of individual sectors participating in trade. On the losing side, stock of the day today was Lupin. Disappointing numbers, expensive stock, and the market didn't like that. That stock was down about 3.5%. Hindalco was down 3%, reacting to Novelis' numbers, and Bharti Airtel was down about 2.5% as well. Now to the space which a lot of people focused on today, the Nifty Junior, non-index large cap stocks. Shree Cement was up 10%. It's overtaken Ambuja as the second most valued cement company in India. United Spirits was up 10%. And Jubilant Foodworks up 6% ahead of its numbers. And in terms of pure mid-cap action, you had some stocks doing well, like Union Bank, that was up 7%, Marico was up 7% as well, and Opto Circuits as well, up 7%. The good thing for the bulls is that there's a good chance that the market may have made a higher bottom today after 8,000, 8,100. But the key would be to make a higher top, and for that the Nifty would have to go past 8350 and 8450. So that's something that we'll be watching out for. But mark my words, if today's volatility was any kind of teaser, we are in for really volatile times.
All right, so that's an optimism and a warning that's coming from you. Anuj, thanks a lot for joining us. Well, the market at the moment is betting that it is more likely to cross 8,300 or 8,350 rather than dip below 8,000. That's the bet as of now. So probably a lot of long positions out there. Well, despite the recent spate of volatility and the expected volatility, Bharat Iyer, the head of India Equity Research at JP Morgan does not think India's star status has been tainted much. In fact, he adds that a 5% correction from current levels cannot be ruled out, but that would be bargain time to buy. Listen.
I wouldn't rule out another 5% or so, but I don't think there's room for downside beyond that. I don't think we've lost our star status on a structural basis. I think it's a very temporary phenomena. And in terms of market performance, I guess, it'll be nice because, we've been firing on one cylinder, which has been global liquidity. But just as that tends to peak out and starts falling off, perhaps that's the time when, our growth revival sets in. And that provides the next phase of boost to the equity markets. I think, if you recall last year, we had this big beta rally between March and June, July. And what you saw was a lot of the economic sensitive sectors do very well. I guess subsequently investors have, gradually realized that the recovery is going to take some time. But that said, they still remain very, very confident on the India macro story. So the money is not left India. It's just rotated into quality. And I think that's been the theme over the last 3 or 4 months.
Right, those were some convincing arguments to stay invested. Let's now shift to the big earnings of the day. Pharma major Lupin reported a disappointing set of fourth quarter numbers. Ekta is here to tell us what disappointed her in the street. Ekta.
Well, it was a disappointing quarter for Lupin on all parameters. The revenue was absolutely flat versus an estimated 10% growth. The EBITDA was down around 5% with margins at 25% versus an estimated 26 to 28% and a profit which was flat versus estimated growth of at least around 12%. Now, in terms of the segments, formulations, which is basically the bulk of their segments, saw a 0% growth on a year-on-year basis. So it was no growth for formulations, and the API business was up around 6% for the quarter. In terms of geographies, US, which is around 45% of their sales, saw a decline this quarter versus estimates of at least a double-digit growth. So it declined 6% for the US business versus around a 4% growth in Q3. India, which is the second largest market for them after the US, which is around 20 to 22% of their sales, was also below estimates and grew around 15% versus a 14% growth in Q3 and versus estimates of around 17 to 18%. However, they did meet the FY15 target of 20% growth for India. Japan, 10% of sales, was similar to Q3, so it saw a decline of 9% in terms of rupee terms, and in yen terms, it was up around 5% versus a 4% growth that they saw in the previous quarter. Rest of the world was down 3%. Remember, this is after around a 30% growth in the previous quarter and 16% growth in Q2, so rest of the world slowed down. South Africa, which is a small part of their business, was quite healthy, so that was up around 15%, and Europe too, which is also around 3% of sales, was up 9%. Margins were impacted overall because of slower growth and because of R&D or research and development expenses also rising to around 10% of sales this quarter versus around 8% in the same quarter last year.
We do see some pressure in the first quarter. In many ways, the first quarter will be similar to what we had as Q4. We really need more approvals to come through, and we really need to action some of the M&A that we've planned as well. I see some good approvals coming in Q2 and especially in the second half of the year, but there will be some pressures in the first quarter.
Well, that was Lupin struggling in Q4 and it showed up in the stock price. Let's move on to another stock which was under pressure, and we're talking about Hindalco now. This after the subsidiary Novelis delivered weak numbers. Nigel D'Souza now joining in to tell us how brokerages are reading the picture. Nigel, what's the street view?
Well, Hindalco was under pressure in today's trading session. That's because its subsidiary Novelis came out with a rather disappointing set of numbers. On the top line, there was a growth of around 9%. We did see the sales volumes move up by close to around 6%. But the big disappointment came in terms of the EBITDA. That took a hit of close to 20% because of a few factors. One being the currency movement wasn't very favorable. The premiums on base metals, that has been falling. And thirdly, we have seen that in fact in the first half of January, one of their mills, that's the North America mill, was shut down for a goodish bit, so that didn't help their cause either. The net profit as well took a hit of close to around 47%, came in 47% lower. Brokerages, they were not very enthused. So Kotak said that in fact the adjusted EBITDA missed their estimates by a good margin. They believe that the EBITDA will be under pressure going ahead because of the lower premiums as well as because of the currency fluctuations, and so they've cut the EBITDA estimates for the next couple of years by 7 to 8% while lowering the target price to around 148 rupees from around 165 rupees earlier. Credit Suisse, meanwhile, they say that the numbers were very, very weak. They say that in fact they expect the EBITDA per ton to continue continue to languish at around the $200 per ton to around $250 per ton, though the volumes could spike up by close to around 40%. Importantly, they believe that Novelis will deliver a negative free cash flow in the coming year. CLSA as well, they were quite disappointed in terms of the numbers. They say that it missed in terms of the volumes as well as in terms of the margins. They will revisit these numbers, and in fact, they do see some kind of downside risk to Novelis' estimates for the next couple of years, but they'll revisit these numbers post Hindalco declaring their standalone numbers.
And now for some news from the capital markets. The Cabinet Committee on Economic Affairs has approved the Divestment Department's proposal to offload 5% stake each in NTPC and another 10% stake in Indian Oil Corporation. The government has already kick-started the divestment program with REC, and a decision on how the stake will be diluted in these two companies, NTPC and IOC, will be taken later.
Okay, time for a break now, but coming up on the other side, Sudarshan Zakhani would be joining in for technical chat. We'll also tell you about the other stocks that were in news today.
When the leaders of the world's fastest growing economies meet, the world takes notice. From the banks of the Sabarmati to Shanghai, President Xi Jinping and Prime Minister Modi hope to build on forging a deeper and more equal partnership. Can Make in India learn lessons from Made in China? From bullet trains to nuclear cooperation, will economic cooperation bridge the trust deficit? Find out on Engaging the Dragon throughout this week, only on CNBC TV 18.